Alright, this is just a quick trend review. I'm gonna go over, I think this is the ES. One second. So basically I want to go over two changes, two turns, an uptrend and a downtrend. These are all intraday, but I mean this the principles, it can be applicable to any trend. It's not really any market or any time frame. The focal point is trend. I understand a lot of folks say this indicator, that indicator, any time frame, any market, but it's not any time frame, any market. It's any trend. All right, the trend itself has principles. Anyway, so you'll see. So what so we were price was in a downtrend, right? Also, no, I'm using this is a 5-minute chart, ES. I'm just using different variations of the wave chart. There are a couple of variations. One is the original Wyckoff. Then the later one is, is also Wyckoff, by the way. He used price and time, and then he also used volume and activity. So nowadays, what you're going to see on the internet is predominantly volume, but I mean, it doesn't really matter. You can use either or. You just have to understand what they mean. What they mean is the tough part, right? Because a lot of times it's conflicting information. So all you know right now is the market's going down, 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 down. I'll just pick a point, like just pick a point. All right. So market is going down, 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 down. So over here you have 513 bucks. You have $725. Then you have 218. This would have caught my attention, but at the same time, the break it's in the break, so I probably look lower because this is the break right here, $1,000. So I mean, if it moves up 725 to test, I'm not really looking for entry there. I'm looking for it to trend down and then then see. So anyway, it starts going down, 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 down. All of a sudden over here, this is where it gets interesting, because as it's moving down, the volume starts expanding and price starts expanding, and you can clearly see evidence of exhaustion right there. How do you know this is evidence of exhaustion? This is the biggest down volume in like 24 waves. All right, now the other thing someone will ask you, well, what about the 15 or the 13 or those that have a lot of volume too? It's because the behavior after the exhaustion confirms exhaustion. So you're looking for automatic rallies, which basically just mean some type of sign of strength or some type of some type of buying. All right, because what happens is there's buying on the down wave and buying on the up wave. So that's why you have climaxes and then changes of behavior or signs of strength, because there's buying on the down wave and buying on the up wave. That's why they're together, because what smart money is doing is accumulating. So how do they accumulate? Obviously they want the best prices, so that's why they accumulate on the down wave. Then when they can't get that best price anymore, they'll accumulate on the up wave. That's all it is. All right, so what you have is all of this going down, 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 down. All of a sudden you have all this volume followed by all that volume. Okay, this should be an immediate red flag. You talk about bull flag, this right here is like a flag. All right, like open your eyes, because this is buying on the down and buying on the up wave. This is accumulation. This is accumulation. All right. The other thing that's notable is that it's in a spring. Goes down, up, down. That's a spring position right there. Okay, now I'll explain how I view springs. I know a lot of other people view springs a little differently and all that. All right. Yeah, it's a slight penetration of support, sure, but also I want the bar not to break away. Meaning the high, when the high is less than the low of the prior wave and it's continuing down, it's very questionable because it means that it's outside of the range, that bar. But you see, all of them are crossing this line, up and down, up and down. The highs are, so it's not, in my view, it's not breaking away. So that's one indication. The other is a slight penetration. Here, to me, this is spring. I mean, like, I'll tell immediately. So right here, it tried to break away, couldn't. It went down, buying on the up wave. Now, the first one and two pullbacks are nothing. They're on nothing. There's no volume here. All right. So what does that mean? Well, to me, forget why, I don't know why I'm saying to me. I mean, what it means is there's no selling. That's what it means. Period. It means that these are secondary tests. So you have a climax followed by two secondary tests right there, which are higher than the climax, which mean that it has passed. The climax has passed. The other thing to note is that a lot of times you'll have between the climax and the secondary test, you'll have that automatic rally or change of behavior, sign of strength. I don't know what vernacular to use, so I'll just say buying. You have buying, and this good buying. It's very good buying because right here you have $863. That's the biggest wave there is. Like, in terms of price, that's the biggest wave there is. Obviously they're buying the low. So ding ding ding. Now this is where it gets confusing. When it makes that high and it comes back down like this is where everybody gets confused, including myself, because you don't know what this behavior is. Is it a continuation of a downtrend? Is it, are they selling? So this is where it gets very, very fishy. Some will call it effort reward. I don't know. I don't know. All I know is that it happens many, many times after a bullish move. You'll have both low volume pullbacks and a high volume pullback going all the way back. I don't know what to call that. I don't know what to call it, but I'm anticipating it. Many times you have a high volume wave right after a change of behavior or sign of strength or whatever that goes all the way down, and it gives a very bearish look. You don't know what that is. I don't know what the term is. It's not LPS or LPSY. I don't even know if it's in the Wyckoff vernacular. I don't know. But I know that this is a behavior and it should be in the Wyckoff vernacular, and it's not as simple as effort reward. It is almost like a deliberate, high volume, dull type of wave, and it occurs where LPS and LPSY occur, either before it or after it. So there you go. And this is it. You see this in many charts over and over again. I see it to the point where I expect it now. And a lot of times what it'll do is goes all the way back, and it'll either test the low bar, meaning the lowest bar, or it'll test some type of creek or ice. Anyway, so you go all the way down, it's heavy volume, and then after that, market rallies, and here, guess what? It's all gone. It's over. That trend is done. This is exhausted. Whatever sellers were there, at this point they're exhausted, and here is the confirmation that they're exhausted. That right there is confirmation that these sellers are exhausted. They tried once, they tried twice, and look at this. 825 to 275, 50 minutes to 5 minutes, they're done. So what to expect after these is the markup bar. That right there initiates markup. What is the markup bar? The markup bar initiates the markup phase of trend. What is the markup phase of trend? If you guys gotta know what that thing is, the accumulation, markup, distribution, markdown. How do you know you've exited accumulation and are in markup? How do you know? That's how you know, the markup bar. How do you know when you ended distribution and are in markdown? There's going to be a markdown bar. There's going to be a markdown bar. All right. So at this point, you have exited accumulation phase and you are in the markup phase. All right, now there's a lot of intricacies. All I could tell you is look at a whole lot of trends and turns and you'll see this. You know, markets, they do not give exact specifications, but they do give guidelines, which requires creative thinking to apply. If you're by the book, meaning in terms of, you know, I don't know, climax, automatic rally, secondary test, sinus strength, phase A, B, C, D, you'll never be able to do this. All right, that entire approach, that specification of following a schematic precisely, it will not help you. My opinion, you may disagree. What it does do, any schematic, what it does do is give you behaviors, but you got to be able to see them in a creative way. And because why does it require creative thought? Is because every single time, every single trend is different in every single market on every single time frame. Obviously, you cannot do it through a formula that is precise, because markets are not repeating in that they're not exactly the same. They're always, always, always different. Somehow, some way, same form. But through just understanding the behaviors, you can creatively piecemeal the behaviors together and figure it out, as I'm doing here, as I've done many times. Anyway, so this markup and blah blah blah, and you see that the down wave. So again, you know, it's gonna go up, and then what do you have here? Selling. Right there. So now it marks up, goes up, and then there is selling. However, what happens before that selling is equally important to tell you whether the buyers are exhausted or not, because the selling will not turn trend until the buyers are exhausted of buying. They have to be exhausted of buying. Now, exhaustion can occur in multiple ways. Typically, it occurs via climax, but it can also occur via a loss of momentum. And loss of momentum can be identified by some types of upthrust or spring, or like shortening of the thrust, whatever you want to call it. Here you have the same case as you did down there, where right there is your upthrust or shortening of the thrust. From that loss of momentum, you had all this selling pressure. Now you want to observe the pullbacks. Okay, you're on the right hand side, and the first pullback is a 5-minute pullback. Obviously right there's a problem. What's the problem? There's no lasting power. So this is a concept of lasting power, meaning its inability to get what is it called, gather a following or some shit like that. It cannot attract a following. So that just means that there's no buyers that are willing to buy. They buy for a very short period of time. You might not even be able to see that directly in the volume, but in the next one you can see it. Here, when the volume dips to a very low level, it's game over, and it goes down. When it goes down, that's your markdown bar right there. Bingo. What does that mean? It means the market is in markdown. That's what it means. That's what it means. and it goes down. It continues to go down. Anyway, so this is the markdown phase of trend. This is why that's why I'm trying to explain here is that all of these behaviors, they are not, doesn't matter what market they're applicable to or whatever, they're applicable to any trend. Okay, it's not a time frame thing, it's not a market thing, it's a trend thing. You're, as a Wyckoff style trader, Wyckoff traders have a fucking unbelievable uh, ability in trend. Like that's their specialty. All right, better than anyone else. All right, they know trend better than anyone else, so that's their specialty. Anyway, so now let's see, ding, 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 ding. Now it's gonna continue going down. You'll see. Nothing here to say it's game over. Nothing here. This volume. Oh, this is after hours. Anyway, this doesn't impress. So that's all, folks. Take care. Bye.